It has certainly been a rough start to the year for stocks, with all three of the major averages ending the first week of the year lower, snapping that 9-week winning streak. Now, analysts, as a result of some of the recent moves and valuations that we've seen for the companies, lowering their earnings projections for S&P 500 companies heading into the fourth quarter earnings season. That kicks off on Friday. We'll hear from a number of the big banks. Now, despite some of the sour sentiment that we are hearing on the street, our next guest identifying two potential bright spots for banks this earnings season. We want to bring in Christine Short, Wall Street Horizon's Vice President of Research. Christine, it's great to have you here. So I think investors, as we take a step back and we're trying to play out or design this playbook here for our viewers heading into earnings season, starting with the banks, what are you a bit optimistic about heading into these reports?
So despite, the lay of the land that you just gave, yes, companies' guidance has been lowered, or analysts have been lowering, sell-side analysts have been lowering their guidance. Mm-hmm. That's because companies have been lowering their guidance. I always take that with a bit of a grain of salt, right? Because going into the season, companies pull back a little bit. They're pretty conservative because they want to lower that bar so that they end up beating, the stock pops, right? It's ultimately better for the stock. So I take company guidance with a grain of salt. We track a proprietary metric called the Late Earnings Report Index. It looks at outlier confirmed earnings dates, those that have delayed earnings versus those that have advanced them. And that's actually tracking really well. Less companies are delaying earnings going in the season. Why is that important? Well, academic research shows if companies push their earnings out, tends to correlate highly with bad news being shared on the call, right? If you have bad news to share, you kind of want to push it, right? And so that index is at the lowest we've seen it since we started tracking in 2015. So for us, that means companies are less uncertain going into the season, which I think is great because 2023 was marked by uncertainty, right? Like, are we going to have a soft landing? Are we going to have a hard landing? Is there going to be a recession? It ended up being okay, but I think some of those worries you have following us into 2024, which is what you see in some of these numbers.
And so as the banks kick things off, what type of perhaps economic forecast did you expect them to, and we've heard from Jamie Dimon in the past talking about a hurricane or classifying things as hurricanes and getting a little bit more meteorologic with it, if you will. What are you expecting that tone to be from them as they kick off?
Yeah, so as you know, the banks kick it off. They're really the bellwether for kind of the rest of the season. They set the tone. And you just mentioned Jamie Dimon. He had some pretty concerning comments I think he used the word, we're in the most dangerous period and we're setting up for a range of outcomes. We're hoping for the best. Things like that don't set the tone very well. Jane Fraser at Citigroup, same thing, talked about, CEO optimism and sentiment being quite low in her opinion. And so investors are really looking to those bank CEOs and that commentary this season to confirm that we are, the U.S. economy is resilient. We are indeed heading for a soft landing. So we're hoping for softer comments, more positive and optimistic comments. And, there's a handful of metrics that we're really going to be looking at. Provisions for profit, loan loss provisions, which, have been built up in the past, and that really correlates highly with what risks the bank sees, how much they're building up for potential defaults. Lending activity, we saw some great mortgage news out today. Mortgage applications are up, so is lending activity returning? And then investment banking, which was such a, a sour note last year. Is investment banking activity returning? Are we going to see some more M&A and some more IPOs?
Do you expect to see that, or do you expect to hear that?
I think if you see interest rates cuts come, there were very high expectations for a March cut. That has since fallen since strong jobs data came last week. But there is still the expectation for rate cuts in 2024. And I think you see more companies go public if that happens and more M&A activity. But I think the landscape is certainly better in 2024 than last year.
You mentioned how conservative some of the companies and their executives were being coming into this earnings season. When you think of the cost discipline that some of them had even deployed at the tail end of last year and the start of this year, we're seeing some of that trickle through as well. Is there an overwhelming theme that you believe will emerge this earnings season?
Yeah, you're right. A lot of those cost-cutting programs that got put, in place in the second half of last year, I think they're going to benefit. You're going to see profit growth. Right now, the current expectation for S&P 500 profit growth is only 1%. That's come down from 8%. That was the expectation at the beginning of October. But like I said, this always comes back up as companies start to report. So I expect us to be more in the mid-single digits by the end of the season, 4 or 5%. It would be the second consecutive quarter of growth. That was after 3 down quarters last year. So we are on the up and up. There is an improvement happening. But of course, Q4 is backwards looking, and I think most investors will mostly be looking forward to Q1 and 2024 comments overall.
And Christine, taking a step back and not just talking about banks, not just talking about some of the individual commentary that we're getting here from CEOs, but what is the number one thing that you think investors need to look for, need to keep in mind when they're going through these earnings reports, when they're going through these analyst calls that could really signal the direction of the markets here for 2024?
Again, just, anything on interest rate cuts, where they think that's heading, overall economy, consumer. I think we talked a lot about the consumer last year being resilient, and we weren't sure if they could hold on. But I think that's heading in the right direction for 2024. So looking for any commentary on that, any the broad backbone of the economy, mortgages and consumer spending, which all seem to be improving. Another theme I have for 2024 is hoping that the breadth of investing expands. Last year was all about the Magnificent Seven, and while that was great and we saw the S&P with returns, it was on the back of a handful of stocks. And analysts will tell you that's not a healthy market, right? So we want to see some sector rotation. We want to see some of the sectors that didn't shine last year, like energy, industrials, materials, even financials, some of those come back into play and not have it be so heavily concentrated to those 7 stocks.
Yeah, one of our guests earlier mentioned healthcare in that same vein as well.
Healthcare, exactly. Yeah.
And we've talked with you about the IPO market. I mean, what needs to happen for the IPO market to have a rebound here this year?
These private companies just need to think it's worth their while and that they have a good chance. Last year, like we spoke on the previous segment that I was talking about IPOs, a lot of those names didn't perform well. And so that spooked, I think, a lot of potential public offerings from happening. And again, I think it's a lot tied to interest rates. I think if you start to see cuts happening, if you start to see the Fed soften their language, that builds up the confidence some of these private companies have to take the plunge and hopefully go forward and go public this year.
Christine, always great getting some of your insights. Thanks for joining us in studio.
Thanks for having me.
Christine Short, Wall Street Horizons, VP of Research here.